Hello, everyone. Thank you for joining us today. I think, Nick, what we might do is, if it's okay with you, we'll just start by doing an introduction about ourselves and what Sharesight does and what ProductRex does, and then I'll sort of take everyone through the slides, and then we'll each do a product demo as well. But just before we begin today, we're going to talk about how advisors are using the latest technology to reduce costs for their clients. So that's the overview. I'm the partnership manager here at Sharesight, so I work quite closely with financial advisors that are off platform or looking to move away from the platforms at Sharesight. I appreciate, that there's a number of users of Sharesight on this call as well, but just to those that aren't familiar with Sharesight, just to give them a bit of an overview. We're a global software business, predominantly an investment portfolio tracker. Just recently, we've hit over 350,000 users of our software. We have two products, the core product being Sharesight, which is for DIY or self-directed investors, and then Sharesight Pro, which is for financial advisors, as I touched on before. We've got accountants using us and family offices as well. What about, I'll jump over to you, Nick.
Absolutely. So my name is Nick Topham, and I'm the founder of ProductRex. And look, ProductRex is basically an investment research and recommendation tool for financial advisors. So we've been running for just over 12 months now. Yeah, that's what we do. We're going to kind of jump into a bit more detail about what we do in a minute. Yeah.
Yep, sounds good. All righty. Well, thank you, everyone. So I'll move on to the next slide, if that's okay. So just before we begin, just want to let everyone know that Sharesight does not hold an AFSL, and anything that Nick and I talk about today is general in nature and not financial or tax advice. So just keep that in mind. A couple of housekeeping rules: the webinar will be recorded. A recording will be sent to everyone that's signed up, as well as a follow-up email. Please keep your microphone on mute throughout the presentation. So at the end, we'll give an opportunity for anyone to ask questions. If you do have any particular questions, you can post them in the chat function. And then, we'll get to them at the end of the webinar as well. So our first talking topic is what's happening to financial advisors and disruption being brought on. So I'll talk a little bit about this first, and I'll talk about some insights at Sharesight. Some of the reasons financial advisors are going off platform, some of the latest technology trends, and then at the end, we'll do a bit of a product demo of Sharesight, and then Nick will do a product demo of ProductRex as well, and then we'll take any questions. So in terms of the disruption that's happening in the financial advice industry, and this is sort of the feedback that we're getting from the advisors that are using us, there's constantly changes to regulation and compliance obligations. There's a huge generational shift. So 1.5 million millennials control more than 2.2 trillion in household wealth. As advisors will sort of notice in the conversations they're having, they're getting more and more younger clients, and they're sort of a little bit, thinking the word to say, they sort of have different interests when it comes to investing, and we'll talk about that. Obviously, the Royal Banking Commission has caused a bit of distrust in the financial advice industry, and that's why the banks are looking to move away. And then now there's also an emergence of technology, so including robo-advisors, crypto, ETFs, and exchange-traded products, and Web 3.0, which is a bit of a buzzword, but it's sort of died down in recent times. We've had everything happening in the crypto market, but we'll touch on that throughout. Some of the pressures that advisors are facing, obviously increased costs is sort of the core focus, but there's competition from robo-advisors, the ability to provide real-time and accurate financial information, tracking investments is a core piece, but also, the ability to do currencies, cash, private equity, various different investment options that clients are now in, and being able to report on that is pressure, for some financial advisors, and the ability to provide that in the form of a consolidated view. Some of the other pressures, so the increased costs, which I sort of touched on before, the ability to provide valuable insights, differentiated service offerings, and that generational shift of wealth, which I touched on, and probably the core focus is to build trusted relationships. Some of those relationships were burnt, by some of the advisors sort of working for the banks. And, I think if I was to give one example, there was a case of a particular firm that was sort of charging deceased interest, or not deceased people, interest and fees, and that sort of caused a bit of concern in the industry. So, there is pressure for advisors to build up their reputation. So those are some of the challenges. I'll move on and share insights that we've got across our 350 subscribers of Sharesight. So in terms of the top trades that we're noticing, we're seeing more and more of our users actually invest in ETFs, which is consistent with that theme of the rise of exchange traded products. So if you look at sort of the top 20 trades, the Vanguard ETFs are the most popular. Obviously, the bigger ASX stocks, like BHP, Macquarie, and some of the other ones. Lithium has been a bit of a theme recently. So those people that are chasing those themes, that's, and then BrainChip, which is a bit of a meme stock. But these are sort of the most popular trades that we've noticed across our users. In Australia, moving on to the top 20 US stocks held by the Sharesight user base. So again, pretty consistent with what most brokers would report on. Tesla is sort of up there, Apple, Amazon, Microsoft, Nvidia, so some of those larger tech companies. And then again, a handful of ETFs, but these are sort of all the most popular ones. So there's more Australian investors accessing US stocks, and it appears as though they're investing in the larger part of the market, according to our user base. So these are the top holdings, which I want to share with you all today across our New South Wales users. So again, it is those ETFs that are popular. So when it comes to trading, people go in and out of tech stocks and in and out of lithium stocks. But when it comes down to core holdings, we are noticing that more and more people are investing in ETFs, as well as those large caps across Australia as well. The most popular brokers that are used by Sharesight. So this applies across both of our products, so both professional and retail as well. So when obviously a lot with CMC Markets, we have a live integration with them. Interactive Brokers, CommSec, Self-Wealth is increasing in popularity. Stake has sort of come across to Australia, and then so the more traditional ones like NAB and Westpac. If I was to talk about our advisor space specifically, there's AussieX as well, which is quite popular, and then Desktop Broker, which is part of Bell Direct. So these are the most popular brokers that are used across our customer base. Moving on, I'll talk about the technology and investment trends that we're sort of noticing at Sharesight. So as I briefly touched on before, there is a rise of exchange traded products. So that includes ETFs. So in 2021, 1.73 million Australians invested in an ETF. So we're seeing a shift of investors moving away from managed funds or mutual funds and going into an ETF for broad exposure. Robo-advisors, so there's more and more of these guys taking off, and they do represent a bit of a challenge to financial advisors in the sense that they are competition. They tend to target millennials and investors with lower balances. Obviously their fees are a little bit lower, but we're noticing more and more of these like raise investors, sort of a popular one, stock spot. So there's more and more of these guys coming to the market here in Australia targeting millennials, and they're sort of making it easier for them to get indirect advice. I wouldn't call it advice. They're basically offering them model portfolios, and encouraging them to dollar cost average. So the way we're sort of seeing it is millennials or younger investors from 20 or even less than 20 years of age up until 30 are sort of going into using a robo advice platform. And then once they get to 30 or above, and maybe they're married, they have a child, that's when they tend to actually speak to a financial advisor and get professional advice. So the way we see it is these are sort of a good way to introduce younger investors to the market. So we've been partnering with a whole bunch of robo advisors. They're interested in our tax reporting functionality, but it's something for advisors to be mindful of. That the younger clients that you're speaking with, there is a chance that they have invested with a robo advisor, and that market is growing. Another one, and this is a bit of a touchy topic, I think you'll agree with me, Nick, but the parabolic rise of crypto and ETFs. NFTs. So 70% of crypto investors are actually millennials. And we've got this chart here from BTC Markets, which is a quite a popular, I guess, crypto exchange here in Australia. So that they sort of give a breakdown. So as you can sort of see, most of the users that they've got are between 25 to 44, so 69%. Less than 24 years of age, it's about 8%. And then as you sort of get a little bit older, it's a lower percentage. So 65 plus, obviously they want a lot less risk, so only 2%. 60 to 65, only 3%. And we think potentially, you know, these older cohort of clients are actually interested in this space, but there's just I guess, an aspect of complexity. You know, they're not comfortable with sort of going on an exchange, having a wallet or a hot or cold wallet and investing. So as more and more ETFs come to Australia with exposure to crypto assets, we probably will see this change. You know, more and more baby boomers will invest, but this is quite insightful as to what's happening in the market presently. And here there's also sort of a gender breakdown. So it's more so males investing rather than females. But yeah, really insightful from BTC Markets. And it's quite interesting that, you know, 77% of crypto investors are millennials. So as more and more money flows into the pockets of millennials and they seek advisors, this is, you know, seek advice. This is something that will sort of come up in conversations. In terms of licensees, we found this data from advisor ratings as to why licensees are disallowing crypto from APLs. Main reason being it's unregulated, not covered by insurance, lack of customer protection, and that's sort of where we touched upon, where, you know, having to hold a hot or a cold wallet, it's a little bit risky. It's very easy to lose your keys. You know, there's a risk element of it, and also a lack of in-house knowledge as well, which I'm sure licensees will work on over the coming years. Something that was quite notable that I wanted to share with everyone today. So Anastasia, who was quite prominent at the ASX as a business development manager, specializing, I guess, in their LICs, from what I understand, and we did a bit of work with her in the past, has actually left the ASX to go work for a crypto fund. So we're seeing more and more people from investment markets leaving, you know, direct equity type businesses and going to work in crypto. So there's definitely going to be an emergence in this industry. You know, Anastasia had a lot of relationships with fund managers and financial advisors. So even some of you that are on the call today may, I guess, hear from her at some point about potentially investing in a crypto fund. I'm not saying that she targets advisors in her new role now. I'm not exactly sure who she targets. But she did have those, you know, pre-existing relationships. So there's more and more people, you know, I think it's quite credible for someone to leave the ASX and go work for a crypto fund. So we'll probably see more and more of this as sentiment in the market changes. Moving on, I'll talk a little bit about APIs, and this is probably Nick's speciality here. But for a lot of advisors, they're wanting, you know, they're looking for technology partners that basically have an open API and are building out ecosystems. And Nick has done a terrific job doing that. And he'll obviously talk about that a little bit later. But by integrating APIs, advisors can incorporate data from clients' accounts into financial planning portals. So like an example of that would be, you know, potentially getting like a data feed from a stockbroker to your CRM. So that's just one example, but there's more and more of that happening. And a lot of these technology businesses like us and like ProductRex are looking to build out our ecosystem. You know, it's quite common now for financial advisors to actually contact us, pull data out of our API and create their own bespoke reporting. So that's becoming increasingly popular. You know, having access to an API, it's allowing financial advisors to have a holistic financial picture. You know, maybe they have certain investments with one platform and maybe there's a whole bunch that are unlisted. So they're using APIs to amalgamate all that data. So that's what we're seeing. And probably just the last point, you know, when a financial advisor is looking for a technology partner, just to make sure that the prospective tech vendor has a track record of rolling out innovative planning features and ongoing updates through an API. But that's definitely coming up more and more in the conversations that we're having. And probably the biggest theme that I'm seeing as part of my role and what we're seeing at Sharesight from advisors is the shift of advisors moving away from the administration platforms and going non-custodial. So, some of your, and I appreciate we have a number of Sharesight users on the call today who are already doing this. But, why are advisors moving away from the wrap platforms is a question that I get asked all the time. And the reason being is just the cost. So here's a bit of a breakdown of the cost difference versus using Sharesight Pro against some of the more popular wrap platforms. So obviously, you don't have to use Sharesight Pro, but if you're using like a non-custodial reporting solution, it eliminates the need for the administration fees. So what we're seeing in the industry is more and more advisors going directly to a stockbroker, someone like Self-Wealth, AussieX, or Desktop Broker, and then syncing that data with Sharesight and using us as an add-on reporting tool. And as a result of that, they're getting large cost savings for their clients. Basically, just eliminates the administration fee altogether. And another reason is being, a lack of investment choices in some of those wrap platforms. Whereas if you're off platform, you can basically invest anywhere as long as it's within your APL. And then you can put that data either via API or via integration or even manually into the reporting tool. So they're the reasons that we're noticing. Just an example here that our marketing team put together. So over the long term, we've sort of done a fee saving of going off platform. So obviously calculating performance is key, and advisors get asked about that all the time. What's my performance been? How am I going? But here's an example on the right-hand side that the cost saving per client over 10 years compared to platform number one in the example. So, over the long term, based on fees of $5,000 for a $1.5 million balance, quite a substantial amount in fees that get paid to these platforms. So longer term, as important as performance is, reducing fees for your clients can significantly help them achieve their retirement goals. Also an example here with an SMSF. SMSFs are becoming increasingly popular in Australia. So traditionally speaking, they get financial advice. The advisor goes through a wrap platform. Then there's often an accountant involved as well who has to use some sort of proprietary software, someone like Class or BGL, and, depending on the balance. But I guess the forecast that we've put together is, an estimated total cost of $9,550. Obviously depends on the balance. Whereas if they're off platform and directly with a broker, there's obviously like a low cost brokerage fee that applies. For the accountant, it's a bit of a cost saving as well because they can access those reports from Sharesight as opposed to having to buy their own software to do all the calculations. The financial, advice cost is obviously built into there, and this is based on our expert plan, but it's quite a big difference for clients that are in a wrap platform versus the ones that aren't. So yeah, thought would share this example as well for those that are looking to unbundle a SMSF. And then here's just the breakdown on a 500K portfolio example of what the fees are. Moving on, have an advisor case study to share with you. So a financial advice firm, EGU, and how they're sort of using Sharesight, that they may be on the call today. So if either Ben is on the call, hello to you. The feedback that they've given us from Sharesight is basically it improves the quality of conversations with clients through greater insight. So as an example, the financial advisors that are using Sharesight, they often share a portfolio with their client. And what that does is it saves a lot of time. So say, for example, the client says, how have I performed in the last 3 months? Or how's it, when am I getting a dividend for this particular ETF? They can simply look that up in our platform in the overview page. So it saves, questions that go to the advisor and their admin staff. And basically, it allows the investor to look up whatever information they want. And that leads to improved conversations. The advisor's not sort of wasting their time saying, oh, this CBA's performed 10%, Westpac's performed 5%, for example. They can just look that up themselves, and then it leads to the client being more engaged and higher quality conversations. This particular advisor group as well, they're using Sharesight for their AFSL requirements. So they're using our consolidated view feature to look up the percentage of whole, to give you an example, that I think as part of their AFSL, they're required to report on how much money they've got in ETFs, for example, across their entire network of clients. So they're using consolidated views to group all the portfolios together, and then it gives them a percentage of how much is in ETFs. So they're using us that way as well. And then also the diversity report for asset allocation and for aligning portfolio performance. And I think, if I'm not mistaken, Nick, EGU, they also use ProductRex as well.
Yeah, look, I can neither confirm nor deny details of any users. However, I'm sure if you asked either Ben, they would be able to clarify that, if that makes sense.
Okay, yeah, not a problem. Okay,
Yeah.
sorry, I take that back. Alrighty, well, I'll give an introduction to Sharesight Pro, just for those that aren't familiar with our product. So in terms of what our product can do, you can track stocks and ETFs. So we support over 40 global exchanges, plus managed funds and M funds, automatic updates of share prices, currency effects, dividends, DRPs, and corporate actions. And we have an award-winning API, which you can either push or pull data out of. And Nick was actually one of, I think we're actually one of your first partners, Nick, if I'm not mistaken, where you built our API.
Yeah, I think you undersell yourself there a bit, Chris, in terms of the API. And API is it's become a bit of a buzzword, which is a shame because it's not really. But essentially, an API is it's just a way of someone presenting data to someone else in a secure manner. That's essentially it. So, but yeah, Sharesight, in my experience, has the best API we've used so far. And it's also worth noting, you kind of mentioned this before. As far as I'm aware, only one of the 9 major wrap platforms has an open API as well, which is, I think, a big difference in terms of, how modern these solutions are, and certainly a credit to Sharesight there.
No, thank you. I wasn't aware of that either, Nick. Yeah, I mean, obviously, it's a challenge to get that data from some of those wrap platforms, but I wasn't aware that only one of the 9 had an open API.
Don't quote me on that, but as far as I'm aware, that's true. Yeah.
Yeah. Well, okay. Well, that's good to know. Yeah. No, and that's the difference. I guess they're more so focused on the administration, whereas we're purely a technology business. So we're under pressure to continuously innovate. So that's something advisors need to be mindful of when looking for a tech partner. But thank you for that, Nick. And moving on, we do comprehensive performance reporting. So we do multi-period reporting, diversity, which some advisors use for asset allocation purposes. There's various different use cases in there. If you haven't had a look, I recommend you play around with it. We do a contribution analysis, which shows how I guess an underlying investment has performed relative to the entire portfolio. We also do tax reporting as well. So like taxable income, historical costs, capital gains, and unrealized CGT. So for us, the investor can generate those reports instantly. They don't have to wait, for a wrap platform or a third party to produce that information. Obviously, when it comes to ETFs, there is a break. We do need to wait for those tax statements to become available. So we've got relationships with the ETF providers. We get that data into Sharesight. So as soon as our investors, get that tax statement, Sharesight is pretty much up to date immediately as well. And then we do co-branded reporting as well. So the advisor can add their logo to any of our reports, and they can also share it with a client. Just a bit of information here about our multi-period report, which I briefly touched on before. In terms of tracking cash, we integrate with Xero, and Xero Cash Books is in particular becoming more popular with financial advisors. And of course, we integrate with the Macquarie CMA, which is probably the most popular integration that our financial advisors use, and they've done a remarkable job. So the integration with them, we send transactions to them, and then we can pull a balance and the transactions from their end as well. And that's incorporated as part of our performance reporting. So we're a cloud business, so you can access Sharesight anytime, anywhere. There's portfolio sharing, for their clients. They can, set up staff members. And then obviously reduce costs. We're a monthly SaaS subscription business, so there's no funds under management fees, no custodian fees, no admin fees, or no hidden costs. And now moving on to Nick, we'll do a bit of introduction to ProductRex. I know there's a couple of slides that you wanted to go through, Nick, so I'll navigate those for you, and then I can let you do the demo after that. But let me know when you want me to change them.
Yeah, absolutely. My slide's kind of pale in comparison to the quality of the Sharesight slides, but that's all right. But look, as I said before, look, ProductRex is essentially an investment recommendation and research tool for advisors. So when I'm talking investment products, obviously we do deal heavily with the wrap space, but also with, direct brokerage houses and Sharesight as well. So we deal with that at kind of a top level. And then, of course, the underlying investments, whether they be ETFs, equities, managed funds, whatever, and SMAs as well. So that's what we kind of look at. Primarily, we kind of hit the two, historical pain points for advisors, which are fees and asset allocation. That's bread and butter for us. But now we're also looking at some more interesting stuff around building a stronger basis for advice, which we won't go into too much today, but that's kind of a real focus for us as well. And doing things like advisors' subjective experience with different administration platforms, which I think is, cost is one thing and it's excellent, but also, the actual quality of platform is also very important, I think, in giving advice. So that's what we do. We're not looking to produce an SOA or an ROA, probably never will. But really what we are doing is giving you the data to then do those advice documents or indeed formulate your advice. Look, the big thing about ProductRex and what our big focus is on time savings. So I spoke to an advisor last Wednesday, I think it was, and they basically brought their time for initial research down from just over 40 minutes to just under 10 minutes. So an enormous time saving. That's just initial research. That's not even doing your actual recommendations. But on average, like it says, we're looking at roughly a 90% time saving to do your investment research and recommendations, which is ridiculous. But that's where we're at. That's what the numbers show. So it's excellent from our side of things. But that's our big focus is on time savings, and it's also on ease of use, as I'll show you in a second, just how quickly we can pull out these kind of comparisons and what we do there. The other big difference of ProductRex is that we do not charge our users anything. There's no hidden costs, there's no upgrades, there's no freemium. If you are a user of ProductRex, you'll pay $0. I do not want your credit card details. I don't care. We work entirely off an advertising model. So essentially we have in-app sponsors who serve you content and pay us so you don't have to. So that's also always good to reduce costs because, as we know, they are only going up at the moment for advisors. So
you can't beat that, Nick. If you can't do a better price than being free. So
that's right. That's right. No, it makes things easier for sure.
And I think the example that you gave before, the time saving, that's huge for financial advisors. So, yeah. So what I might do is I'll stop sharing my screen and I'll give you the opportunity to share yours. And if you want to maybe give us a couple of examples, that would be great.
Yeah, absolutely. So I'll just turn it on. Here we are. So the example I was kind of going to run through today is it's just it's an easy one to get your head around. So essentially what I've imagined here is we've got a new client in, they've got an industry super fund, and we are going to recommend they move to a portfolio of equities. For argument's sake, I've called this Sharesight Pro. In reality, advisors might like to call that whatever brokerage house they are actually using, but just for argument's sake here, I've just kind of abstracted it. So we're going to run through this kind of scenario. Before I do, it's worth me noting that, of course, we do have that full integration with Sharesight, so you can do like a really, really slick automated import of existing clients on Sharesight, which is great. You imagine you got 20 equities in a client portfolio, you click like 2 buttons and it all just magically appears. So but we're not going to run through that today. We're just going to run through a bit of a simpler one. So I've gone into an industry super fund. I've already put that in. We won't worry about that. I'm just going to jump into this Sharesight Pro platform I've done. And really quickly, all I'm going to do is I'm just going to drop a model portfolio in there. So it's going to be a growth portfolio. We're going to drop in 500K and drop that in. And super basic. I've pretty arbitrarily chosen some equities here. We've just created a platform with we've created some holdings in our Sharesight account. So really, really basic. And of course, now you can see the difference, a rather significant difference between this industry super fund and this Sharesight Pro entity that I've created. So again, we're skipping a few steps here because I don't want to, bore people. But what I think is really powerful, and you were talking earlier, you had your chart, but comparing platforms, you didn't name names. Unfortunately, I have to because that's just how this works. But essentially what we can do is we can grab that same recommended portfolio that's in this Sharesight account. We can duplicate it and drag it over to alternatives and say, what if we actually did hold that within, let's say, premium or something like that? So, basically the same recommended portfolio in the premium platform. Really, really quick way to actually compare the cost of those platforms. You do another one for BT Panorama, for example. So I've chosen Super, but it doesn't really matter. Same kind of deal. But yeah, so really, really sorry, I'm clicking too many buttons and trying to talk while typing. But a really quick way to compare different platforms with Sharesight. Same portfolio. I'm just really quickly spinning them off, and you can do that as many times as you like. I've chosen probably two of the cheaper wrap accounts here, but they do get considerably more expensive. I've just kind of arbitrarily chosen two here. So just thought I'd kind of show you there a really quick snippet of what ProductRex can do. Of course, this is a very small part of our functionality. You can pull out reports. You can work with other different types of scenarios, other different types of assets. But just wanted to illustrate some of our functionality and at the same time showing, I guess how Sharesight really cuts those costs for your clients.
Excellent. Thank you. Thank you for that, Nick.
That's all right.
So in terms of the presentation itself, I think we've sort of gone ahead of time, if anything. Was there any other features or talking points about ProductRex that you wanted to go to, or should we open it up to questions?
Look, I think I touched on it briefly there. I mean, we've done a rollover in this case, but obviously another key thing, especially with Sharesight users, is with rebalancing accounts or rebalancing portfolios. So I think that's where that import functionality really comes to shine. I'd love to show it to you, but because I'm not an advisor and I don't have any clients, I don't actually have a Sharesight account that I can import. Yeah. But it's really great. You just hook it up and click, you just select your client from a drop down and all their accounts can appear and you do your rebalances. We're talking well under 10 minutes to do a rebalance for a client, which is that's unheard of.
That is very impressive.
Yeah.
Perfect. All right. Well, thank you for that, Nick. I guess we'll open it up to any questions. If anyone has anything that they want to ask us, feel free to take yourself off mute, or you can even ask. We've got no questions here in the Q&A, but I'll open it up. I'll give everyone a couple of minutes. But yeah, any questions about Sharesight or any questions for Nick about ProductRex? Alrighty, I don't think we've had any, Nick.
None coming through.
No.
We covered them all too well, mate. That's all right.
We must have. We must have. But what we'll do is, maybe sometimes people don't like to ask in an open forum. If you do have any questions, what's the best way that they can sort of come to you, Nick?
Look, you'll find my details you'll find my details obviously in the thing. So just send me an email. Message you on LinkedIn. I don't really mind. Either way is fine. I just got a quick question here from I've just seen popped up here. Shouldn't you add some brokerage fees into Sharesight costs to make it a bit more realistic? Absolutely. I think there actually is some that I threw in there before. However, the fees that were shown on the screen are just the annual ongoing costs rather than transactional costs. Those transactional costs come out when I actually generate a report, which I didn't do in this demo. But yeah, absolutely. When you add platforms, whatever it may be, it will bring through those brokerage fees in your eventual data too.
And can that be done for broker as well, Nick?
Yes, yeah, you do that for on a broker or a Sharesight level.
Okay, yeah. Perfect. Yep. So hopefully that's answered the question there for Alex.
Yeah, it's all, look, that stuff's covered. Essentially, one of our focuses. Interesting. This, I guess, an approach for Sharesight too is to show what you need on screen and have that drill down data as you need it, rather than just bombarding people with information. So, sorry if I didn't make that clear.
No, I think that's answered the question really well. Alrighty, perfect. Well, as everyone that sort of registered for the webinar today will get a copy of it. So we'll send a copy out to everyone. And then as part of that, Nick, we'll include your contact details as well as my contact details if anyone has any additional questions. If someone wants to go to ProductRex and try the product, it's as simple as just going onto the website and signing up.
Absolutely. Yeah, jump in there. It takes under 2 minutes to create an account, jump in there. And but something we haven't actually covered in your slides is there is a special offer for Sharesight and ProductRex, which is probably worth you tackling, I think.
Yeah. So we'll send that in the email as well. But yeah, there is a special offer as well, which is exclusive to ProductRex users that are using Sharesight for the first time. But we'll include that special offer as part of the email that we send out to everyone that registered.
Awesome.
All righty. Well, thank you, everyone. We'll send that email out. And if anyone has any additional questions, feel free to come back to Nick or I directly.
Terrific. Well, thank you. And thank you, everyone, for joining as well.
Okay. Thanks, everyone. Bye.
Bye.